Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. We are standing by for SpaceX to launch yet another rocket just a half hour from now. They'll be launching another satellite into space. If this happens, it would be the fastest turnaround time ever for a rocket between two launches. This is the same rocket that took those astronauts Doug Hurley and Bob Behnken into space a couple of months ago. We'll be standing by for that plan now. Half past the hour. Meantime, taking a look at the markets today, stocks rising to the highest levels since February. This is a number of company stocks, including Amazon and Zoom, continuing to rise due to extended shelter in place and work from home orders. More earnings out this week that we will be watching: Microsoft, Intel, Tesla, and Twitter, as new records for cases and deaths due to COVID-19 are being hit in states across the country, including the first death of a child being reported in Minnesota. This as the president, governors, teachers, unions, and parents continue to battle it out across the country over whether or not schools should reopen. Meantime, you've got U.S. lawmakers starting to put together another coronavirus relief package this week. That is what our next guest is here to talk to us about. Steve Case, co-founder of AOL, also the CEO and chair of Revolution, out with a new op-ed in the Washington Post today, taking a look at what he believes Congress should be focusing on with this relief package. Steve, thank you so much for joining us. It's good to have you back on the show. I want to start with your headline. You say that the pre-pandemic economy isn't coming back ever. So what about the new economy will be different forever going forward, in your view?
Well, some things really need to change because people talk about post-COVID getting back to normal, but the reality is normal didn't work for a lot of people. I mean, 6 months, 12 months ago, we were talking about how we need to have a more inclusive innovation economy, not just backing entrepreneurs in places like Silicon Valley, but all over the country. We talked about needing to make sure people from every walk of life had an opportunity if they have an idea. Women, for example, last year got less than 10% of venture capital, represent half of our country. African Americans, Black founders get less than 1% of venture capital, even though 13% of the population. So as we think about this, of course, we need to be focused on recovery and reopening and so forth, but we really need to imagine a new economy that works for more people in more places. And that's what I hope Congress will now focus on. They did the right things to stabilize the existing businesses, the PPP program, things like that. It was an important start, almost like triage in the emergency room. But now we need to focus on getting moving forward and making sure that we have an economy that we can be proud of that really does bring everybody along. And that's what I think this phase 4 legislation should focus on.
Now, you've traveled the country looking at entrepreneurship trends, and I'm curious just how many or how vast do you think the failure of small and medium businesses across the country will be as we go into a second wave of the virus? And some of these businesses that have been trying to hang on through the first wave say they just can't hold on for another few months.
Yeah, I think it's going to be tough. But even without COVID, a lot of businesses go under every year. There's a this kind of creative destruction process, which is why it's so important to be planting the seeds of the new company, some of which will emerge to replace some of those jobs that inevitably will be lost. I think because of COVID, we'll see even more of that over the next year. And there's only two ways to approach it. Either the government steps in and says we're going to provide more support money for the communities that are struggling, the people that are struggling, and that is part of the solution. Or there's a focus on how do you launch those new companies to create those new jobs, not just focus on the rearview mirror on the existing companies, sort of almost the industries of the past, focus on the new companies, the startups that can help create the industries of the future and do it all over the country, not just in a few places like Silicon Valley. So that's what my hope will happen here, that there will be not just a return to normal, but an opportunity to create a stronger economy that really is more inclusive.
So you're asking for Congress to sort of prioritize smaller startups in terms of the businesses that are getting funding. And I wonder, how does Congress identify, or how does the U.S. government identify who qualifies? I mean, as we both know, there are plenty of small startups with big ideas that make big promises, and they don't deliver. And even, very intelligent venture capitalists who are working on this every day miss the big opportunities. So how does the U.S. government then decide who to give money to and who to essentially leave behind?
Well, for starters, I don't think the role of the government is to be investing directly in companies, trying to pick winners and losers. So, as much as they did with the PPP program, in putting capital behind banks that could make lending decisions, some of those lending decisions should be based on what jobs can be created in the future, and that can be tracked. And the forgivability of the loans will be partly tied to how many jobs are in fact created in a sustained kind of way. Similarly, there's been legislation introduced now 4 months ago by Senator Klobuchar and others to really provide from the Treasury some support for regional venture capital firms with a particularly bias to more inclusive entrepreneurship. So there are existing ideas out there. We just need Congress not just to focus on the past, but focus on the future, not just focus on small business, however important they may be, but focus on these new businesses because they're the big job creators. Big business, Fortune 500, does not create a lot of jobs as a sector. Small business, however important it is, does not create a lot of jobs as a sector. The new companies, the startups, are really where the focus needs to be. And by the way, it's not just tech startups. Startups all across our economy, healthcare, food and agriculture. There's real opportunities to really back the next generation of entrepreneurs. We just need to do it everywhere, not just in a few places, and need to include everybody, not just a few people.
So I'm curious then, where are you putting your money to work at this time with Revolution? Like, where do you see those opportunities, especially as we see this potentially tectonic shift in how and where we work and what we essentially need to do our jobs?
Well, Revolution has three parts: Revolution Growth, Revolution Ventures, and the Rise of the Rest Seed Fund, where I spend a lot of time is on the Revolution Growth kind of later stage investments. We're doing a lot of things in the healthcare space. A company called Tempus in Chicago is doing extremely well using big data to provide a better way to think about oncology. We backed a company called Scopely, had enormous success around mobile gaming. We're seeing a lot of traction in that space. We've backed companies in the food sector, including Sweetgreen, a fast casual concept that's doing extraordinarily well. They obviously had to shut down their restaurants, but they accelerated their efforts around delivery and pickup, and they're expanded their menu. We've done some things in e-learning. A company called Echo 360, we invested in Workspace, a company called Convene that has repositioned because their core business obviously had to be shut down to figure out how to do virtual meetings and hybrid meetings where some people will be in the room, some people will be virtual, just as some people will be working from office, other people will be virtual. So we're seeing enormous innovation happening from great entrepreneurs trying to reimagine what the future might look like. And so we're excited about the future across all of the aspects of Revolution. But there are some of the examples from Revolution Growth that are really showing enormous momentum. Lastly, I should say we've invested in a number of sports tech companies. Ted Leonsis, as you know, is a partner of mine. Worked together now for 3 decades. DraftKings was an investment. As you saw a couple months ago, they went public. Sport Radar is another company in the data analytics space. So amazing companies that we've had the real privilege of backing.
Curious then, since you mentioned that, what is your outlook given the uncertain return of professional sports for the sports industry in general?
Well, Ted is the expert on that, so you probably should ask him. I think it will be a slow recovery. Obviously, you see some of the leagues already reopening. The amazing thing to me is a company like DraftKings, because the leagues were shut down and they really rely on them, was still able to do a very successful offering, in part because people did see how the future would play out and how a company like DraftKings would become more important, kind of going forward. But I think it'll take some time. I also am the chair of the Smithsonian. We're in the process now of starting to reopen some of the museums. The first couple open on Friday. We'll slowly open the others, but we'll have to keep an eye on it because it may be a situation where, if you've seen in other countries, sometimes you've opened but then have to close again. So I think we're not out of the woods for sure with COVID. I think there is a real risk of a serious second wave, but we'll get through this as a country. I just hope, which goes back to the main point of the op-ed, we get through this and really have a stronger economy that really is working for more people in more places. And that's why I'm urging Congress to really focus this time not on existing businesses, but new businesses, and have some of the legislative focus in phase 4 on startups.
Meantime, as you're advocating here for the government to support smaller businesses, you've got Congress scrutinizing the biggest tech companies in the world, the CEOs of Apple, Google, Amazon, Facebook, all scheduled to testify on Capitol Hill on Monday. I mean, as somebody who built an enormous technology company, what is your take on this? I mean, do these companies present a good case for being broken up?
Well, I think each of them has a little bit different story, and I'll let them tell their story. But I'm not surprised there's more of a scrutiny of these big tech companies. I'm also not surprised there's more of a backlash, what some have called a techlash. I actually wrote a book 4 years ago called The Third Wave and talked about how in this third wave of the internet, policy was going to become more important, more regulatory issues were going to become more important. So I think we're now seeing that play out. Facebook, obviously, is the most visible company now with some consumers, but also a lot of advertisers kind of backing away from it. Hopefully they'll use this as an opportunity to take a step back and rethink some of their policies so they can build on what is an extraordinary success, an extraordinarily powerful platform, but also make sure they're doing things that are constructive, not destructive for society. So I'm not surprised by the scrutiny. It'll be interesting to see what happens when they all come to Washington. Hopefully that will be not just a one-off event, but an ongoing effort to educate policymakers on what they're doing and why they're doing it. I think we need much more of that constructive dialogue between places like Silicon Valley and Washington, D.C., Brussels, other parts around the world. This third wave is going to be complicated. Policy is going to be front and center because it's critical to healthcare, it's critical to smart cities, it's critical to many of the opportunities to really innovate. So we're going to have much more of a dialogue between the innovators and the policymakers.
On that note, I know you're an investor in Talkspace. Oren, the CEO, was on our show when he pulled out of a potentially huge partnership with Facebook for this very reason, that he didn't support the decisions that Facebook and Mark Zuckerberg were making about speech on the platform and decisions about President Trump's speech in particular. In those cases, do you think that Facebook is making the right call?
No, I don't. And when Talkspace announced they're pulling back, I supported their decision. It hurt their business because the Facebook partnership certainly could have been important. Hopefully, it'll be offset by others really rallying around the company and supporting what they're trying to do around digital mental health, because it's an important problem as a society we need to solve. I think the fact that now hundreds and hundreds of companies have joined Talkspace and pulling out their advertising off Facebook, hopefully, is a wake-up call that I think the company needed. And I would imagine they are reassessing things, and hopefully in the weeks and months ahead, maybe there'll even be some announcement the next week with Congress that they'll be a little more forward about trying to make sure they manage their platform in a responsible way.
So what do you think Facebook should be doing differently? I mean, do you think that Facebook should be flagging these posts by President Trump that seem to be advocating violence on the American people?
Well, I'm not going to get into the specifics because I don't have all the facts that Facebook has. They took some initial efforts to put together a group to review some content. I think that was a step in the right direction, but they need to continue to look at ways to iterate this. I obviously dealt with this 20, 25 years ago when AOL was the leading service in the country, and we actually dealt with a lot of these issues in terms of speech, and even had the first litigation around this rule called the 230 rule. So I understand the complexity, understand the subtlety of it. I don't think just having kind of quick answers with limited facts is the way to proceed. But clearly there's a lot of people, and it's not even a Republican or Democratic issue. It's not just a business versus government issue. There's a lot of people that really think, while they respect Facebook and what they've done, they really think it's time to take a step back and do some things differently. Other platforms such as Twitter has begun to be more active in that space, and I think they're shouldering the responsibility you have when you're leading a company that has such a profound impact on our everyday lives.
Meantime, AOL was always based closer to Washington, and I wonder if you think that some of these newer generation tech companies could be doing a better job managing that relationship, because it certainly seems like the scrutiny isn't going away anytime soon. I know Amazon has been working towards a second headquarters in your neck of the woods in Northern Virginia, close to AOL's old neighborhood. Who knows how quickly that will develop, given this trend towards working from home. But I wonder what your outlook is on the general relationship of these companies with the White House, whether it's a Republican or a Democrat in office.
Well, I think it's going to become much more important. Again, when I wrote the book, The Third Wave, I talked about the first wave when companies like AOL and others were building the internet, building the on-ramps, getting people connected. Policy was front and center. When we started AOL 35 years ago this summer, it actually was illegal for consumers or businesses to be on the internet. It was still restricted to government use and educational institution use. So that had to change. All the issues around tax policy for e-commerce had to be kind of worked out. So policy was front and center. The second wave, when it was about software and apps, services riding on top of the internet, Facebook and Google and other things, policy was not that important until the companies got really large and started having a kind of outsized influence. In the third wave, when the internet really kind of meets everyday life and it really changes healthcare and food agriculture systems and smart cities and financial services and education, all kinds of different things that are going to be pretty fundamental changes in our everyday life and pretty disruptive to big sectors of our economy. Policy, regulatory issues are going to become important again. And innovators don't like to hear that, but the reality is we as people do want somebody to make sure the drugs that we're taking or the medical devices that we're using are safe. We do want to make sure that while drones and other kind of technologies can be super helpful, that they don't create harmful impacts in terms of privacy or other kinds of things. So policy is becoming more important. It's only going to increase in the next 10 years. The critical challenge is to make sure the innovators and the policymakers really are having that dialogue so the policymakers don't overly regulate, stifle what might be possible, or the innovators don't overreach and create problems, including around kind of big brother privacy sorts of issues. It's going to be tricky, but we're only going to get to the right place if we have a constructive dialogue with both sides. Hopefully, the discussions now happening, but even though they may be focused more on a few big companies and antitrust kind of issues, hopefully that leads the way towards a much more engaging and consistent dialogue around how to drive innovation to make sure the United States remains the most innovative entrepreneurial nation in the world as we move into this third wave and deal with all the implications of it. And hopefully, going back to what I said at the beginning, we also can do that in a much more inclusive way, so that people in all over the country who have ideas can access the capital to start and scale those businesses, create jobs in those communities, so people in those communities have more reason to be hopeful and optimistic about the future. There's a lot of work that can be done as we move beyond rebuilding to reimagining to create a new kind of capitalism, a new kind of more inclusive innovation economy, and really lead the way, hopefully, as a nation in this third wave of the internet.
Absolutely, and you make that point in your op-ed that we should be giving special attention to women entrepreneurs, people of color, and I do appreciate that. Steve Case, co-founder of AOL, CEO of Revolution, thank you as always for joining us on the show. Obviously, your perspective on all of these issues is incredibly valuable. Coming up, we're going to be talking about IBM with results out after the bell, second quarter earnings, beating estimates on a serious boost from cloud demand. Speaking of working from home, we will bring you the latest next. This is Bloomberg. The stay-at-home trend roared back today, the first day of the week after a rough week last week, sending the NASDAQ 100 to the best gain in 3 months and pushing one measure of momentum to its highest point in decades. Joining us now to break it all down, Bloomberg's Abigail Doolittle, who's been following the markets today. I know that Amazon, Zoom specifically shined, essentially. What were you watching, Abigail?
A very unusual day indeed, Emily. Huge divergences. You have the S&P 500 closing up by more than 0.8%, even as 8 sectors closed down. As you can imagine, the 3 sectors that closed up: tech, consumer discretionary, and one other, in fact. So you can see the NASDAQ 100 surging up 2.9%, a record high. This, of course, last week after all of the tech weakness, that FANG index up nearly 4%. You were just mentioning Amazon. Emily, this is just amazing, up 7.9% after losing 7.4% last week. Not really a picture of stability. Goldman Sachs raising their price target to 3,800. Other positive analyst commentary. Nothing fundamentally changed, to my knowledge, on Amazon over the weekend. So the fact that you have analysts and really more so investors and traders willing to value it so differently today is a little bit stunning. But that was really the big mover of the rally. And on all of this, though, we do still have volatility for the NASDAQ 100 and some of these big tech and mega cap names higher. Take a look at the NASDAQ 100 VIX, the VXN. It is still holding its 200-day moving average. There are technical reasons there to think that we could see a burst of volatility to the upside, but not so much today. Just strength for those stay-at-home stocks, Emily.
Meantime, Abigail, we're waiting for that SpaceX launch to happen, scheduled for the bottom of the hour, about 9 minutes from now. Fingers crossed it actually goes through. It was scheduled for the top of the hour, now moved a half hour. We will be covering it. You've been taking a look at space stocks. What did you see?
Well, Emily, when I started on Wall Street many years ago, more years than I would care to admit, if you had told me I'd be talking about space stocks, I wouldn't have been able to believe it. But yes, there is such a sector. There's actually a space ETF. This is more geared toward defense, anything related to space, Siri, Dish. We also have Boeing in there, lots of different ones. Bitcoin relies apparently, or some think that it could do better off of satellites. We also have another Rocketdyne, Aerojet Rocketdyne Holdings. That's more geared toward defense, more so than that space ETF. And then perhaps the best pure play, Virgin Galactic, down 4.5%. Perhaps weak, Emily, today as this SpaceX launch is going to be happening, Emily. So interesting action there for sure.
All right, Abigail, thank you so much. Your dream come true covering those space stocks. Appreciate you taking the time. We'll be having that SpaceX launch hopefully now about 8 minutes from now. Meantime, I do want to get to IBM. Shares spiking after reporting its second quarter results on strong cloud demand. I want to get more perspective now from Julie Bhusal Sharma with Morningstar, who joins us now on the phone. Julie, walk us through the numbers and what stands out to you here.
Yeah, thanks, Emily. So IBM had a great quarter given the circumstances. While IBM previously had not given guidance for the quarter, just due to pandemic-related uncertainty, they beat market consensus on both revenue and non-GAAP EPS. So what really stuck out to us in the results was that its software sales were not as bad as we expected, which we think indicates that its customer base thinks of, large software overhauls as a priority more so than we thought, even though, technically these projects could be postponed post-COVID-19. But that being said, it's important to note that in the second quarter last year, IBM had not acquired Red Hat yet. So year-over-year comparison software are certainly inorganically inflated from the Red Hat addition.
Meantime, IBM was in a unique position and passed the baton from the old CEO to the new CEO in the middle of the pandemic. How do you believe the new CEO is performing thus far compared to Ginni Rometty?
Yeah, I think that, he's performing well, again, given the circumstances, and the earnings certainly reflect that. And in terms of just the overall cloud strategy, if I think, in the long term, the fact that he was, I do think that, despite the change, it's not going to have much of an effect on the long-term cloud strategy. I think they've been making the proper moves and making a lot more of their offerings more available on competing platforms. But, all in all, I think he's doing a good job.
New CEO of IBM, Arvind Krishna. So what will then you be watching the next quarter? Of course, it seems like some of this work from home, sheltering in place is going to go on for longer than we had expected. What does that mean for IBM?
Yeah, so what everyone's watching with the shelter in place is just whether, discretionary revenue from its customers will be delayed further. So, there are a few things I'll be looking for on the earnings call. Firstly, I'll be looking at how their digital transformation business performed in the quarter. If we see that digital transformation revenues improve during the end of this past quarter, we think that would be an indicator that, IBM as a whole will be recovering from the effects of the pandemic, that, companies are getting more into that discretionary spend than we thought. And then secondly, of course, we'll be looking for more detail on Red Hat. Our take all along has been that the Red Hat cross-selling opportunity is not what IBM has cut it out to be. Red Hat for the longest time had no direct competitors.
Julie, we'll leave it there. Julie Bhusal-Sharma of Morningstar on IBM. Thank you so much. Coming up, we're going to be watching that SpaceX launch scheduled to happen minutes from now. We will take you there live. This is Bloomberg. Welcome to Bloomberg Technology. I'm Emily Chang. SpaceX just seconds away from launching a Falcon 9 rocket into space carrying a South Korean satellite. There it goes up into space, launching a satellite that will work with the South Korean military on secure communications. Now, what is significant about this launch is that this will be the shortest turnaround time for any rocket that has been reused. This very same rocket is the rocket that took astronauts Bob Behnken and Doug Hurley into space almost 2 months ago. So SpaceX now breaking its own record for the turnaround time for a rocket. So far, everything looking like it's happening as planned. We've got Sean Casey of the Silicon Valley Space Center on the line watching this with us. Sean, talk to us about the significance of this launch in particular.
Well, yes, aside from the launch of a military satellite for the Republic of Korea, this has, as you mentioned, demonstrated SpaceX's turnaround time of under 60 days. The previous record of 54 days was actually held by the NASA program for their Atlantis shuttle. So this is, 5 days under that 54-day record. So it's a new record, and it also demonstrates the continued reuse of the Falcon 9 Block 5 vehicles. This is a workhorse for SpaceX, and I would say a cash cow for the company.
Now, we're going to be following this for the next several minutes, and then we'll also be covering the landing of the first stage on the SpaceX drone ship. That's another critical step in this particular mission. Sean, it's fun to go a little back in time and look at the history of the space program, but as I understand it, the last time a space shuttle launched again this close together was back to the Atlantis days in 1985, just before the Challenger disaster. So even as you look at this over several decades, this particular launch is quite significant.
Yes, it certainly is, because SpaceX, we had previously planned to cover the additional Starlink launches with Black Sky. SpaceX has done a dozen this is the 12th launch for 2020. Many of these launches have been focused on the Starlink constellations, and recovery is key. For one of the other launches that's coming up, it's going to be the 5th flight of one of the Block 5 vehicles. As you mentioned, this is the second flight of the Block 5 vehicle, and there we've just seen the separation of the booster stage from the second stage vehicle, and the booster stage is going to return on the Just Read the Instructions robotic tugboat. In addition to returning the booster stage, SpaceX is planning on recovering the fairing, which, they've got 2 ships out at sea, Mystery and Mischief, and, it's important for cost recovery in order to keep the internal costs for launch down for SpaceX.
All right, so as you mentioned, the first and second stages have officially separated. We're going to be following the landing of that first stage, and as you say, we're also going to be following the recovery of the second stage. This is all going to be happening in a matter of minutes. What exactly is this satellite going to be doing in space? We know that there's only one, I believe, South Korean military satellite in space as it stands. So this is potentially a huge new addition to their arsenal.
Yes. South Korea has about a 25-year history of various civilian satellites. This mission, the Anasis 2, built by Airbus under contract to Lockheed, is solely a military communications satellite. KoreaSat-5 was a combination of both civilian and defense communications, but with this, it establishes a secure communication channel for the Korean Department of Defense, and these things typically operated at frequencies from 3 to 30 gigahertz. So the technology is well defined, but it is the first dedicated defense satellite for the Republic of Korea.
Now, I can't help but mention that today is also the 51st anniversary of the moon landing of the Apollo 11, and here we are making history yet again. Talk to us a little bit about the technology, because Elon Musk's whole mission has been to make space technology more affordable, more achievable, especially for the United States. As SpaceX and Elon Musk can continue to prove now over and over again, and they've had quite a few launches so far this year, that they can do this successfully. What does that mean for our ability to continue to explore the final frontier?
Well, this really means bringing down the launch costs. Especially for SpaceX. I mean, SpaceX has this incredible vehicle, the Falcon 9 Block 5. It's intended to reuse, close to a dozen times before an individual vehicle is retired. SpaceX has mastered this landing sequence that we're seeing. We have titanium guide fins that have been deployed on the first stage, and as the second stage burns to orbit, the first stage is making its way to a recovery platform out in the Atlantic. SpaceX and Blue Origin are both under contract to return U.S. astronauts, perhaps the first female astronaut to land on the moon, hopefully within the next decade. And we may see a resurgence of lunar activity, of course, led by NASA with a whole host of international participants. So I think from the space sector, it's extremely exciting to see a resurgence in lunar activity, perhaps over the next 10 to 20 years, and then pretty clearly that Mars is in the crosshairs for the 21st century. We've already had several robotic rovers on Mars. China landed on the moon in 2013. Could they be back? Could they do their first Mars landing in sometime this decade? And Elon Musk and all of his engineers at SpaceX are focused on building a reusable vehicle to get to Mars. So reuse is right. Essential. Reuse is part of the aviation industry, and now it's going to be part of the aerospace sector.
Now, we are standing by for that first stage to land any minute now. Typically, that happens about 9 minutes into launch. We're about 7 minutes and 36 seconds now, according to the NASA countdown clock into launch. That first stage will be landing on the quote-unquote, just read the instructions drone platform provided by SpaceX. Sean, what are we looking for when it comes to a successful landing of the first stage?
Well, SpaceX, if you go to YouTube, you can see all of the unsuccessful landings that they've had, and clearly, the first stage coming down and staying put on that platform. From the landing, it's then a one-day tug back into port, and then the SpaceX engineers will refurbish the vehicle for its next flight. I think what we're seeing right now, it's pretty much at 8.5 minutes where that first stage comes down, and it's phenomenal to see both this for the Falcon 9. There it is; it's just landed. But it's even more phenomenal to see this when they launch the Falcon Heavy, because that's essentially 3 stages all tied together during the launch, and they all come back separately. It's just I would say, an engineering thing of beauty to behold.
All right, there you have it, Sean. Thank you for your eloquent narration of that successful landing of the first stage on the SpaceX Just Read the Instructions drone shift, about 8 minutes and 45 seconds into the launch. The second stage continuing to hurtle into space. I want to bring in Tess Hatch now of Bessemer Venture Partners, who worked at SpaceX, who worked at Boeing, and has a long history in the aeronautics industry. Tess, thank you so much for joining us. Obviously, this is a big day for your former colleagues at SpaceX. Put this into context for us. I know that you specifically worked with the government during your time there for SpaceX to yet again have a successful launch here. What does that mean?
Extremely exciting day, another exciting day for the company. And the most notable aspect of today's launch is that SpaceX is breaking its own record for turnaround time to reuse its first stage booster. And this booster was first used to launch astronauts Bob and Doug to the International Space Station on March 30th. And that launch was monumental because it was the first time we launched Americans on an American-made private rocket from American soil since 2011. And the launch today means SpaceX will have reused this booster in just 51 days. Another private rocket company that's working on re-landing, refurbishing, and reusing the first stage of its rocket is Rocket Lab, a company my firm, Bessemer Venture Partners, has invested in and was the fourth most frequently launched launch vehicle globally in 2019, behind China, Russia, and SpaceX, and in front of Europe and Japan. And Rocket Lab has launched 12 times, deploying over 50 satellites into space. And often Rocket Lab, and I'm assuming SpaceX, are asked why they are pursuing reusability and recovery. And most people think it's about driving launch costs down. However, for Rocket Lab, the focus is actually on launch frequency. If we don't need to build a new first stage for every mission, we can move faster and launch more often to meet our customers' needs. And even though SpaceX, Rocket Lab, and other companies are launching now with increasing frequency, I still find every launch to be exciting because it further opens space for business.
It's wonderful, Tess, to hear your enthusiasm. And as you mentioned, Bob and Doug, the astronauts are still in space right now at the International Space Station, scheduled to come back now in about a week. This is, as you correctly point out, the shortest turnaround time that SpaceX has now had between two launches. It's been 50-some days. They want to shrink that even further from a matter of weeks to just a few days at a time. What will it take for SpaceX to get to that rigorous a schedule where they're essentially launching and relaunching rockets just days apart?
It really comes down to this reusability. If one doesn't need to rebuild a first stage every launch, and you can simply refurbish one that has previously been launched, the time between launches has the ability to decrease from 51 days to a week. I don't know the goal for SpaceX, but for the goal for Rocket Lab right now is a monthly launch cadence, but we hope with landing, refurbishing, and reusing our first stage, we can get that down to weekly, if not 2 launches a week.
Talk to us about the burgeoning space economy. Obviously, this is an area you're invested in, but every successful launch creates, more optimism around space, opens up new possibilities. Outside of Rocket Lab, where do you see the biggest opportunities for space investing?
I want to invest in space companies who continue to open space for business, and am particularly interested in investing in founders who are utilizing unique sensors in space. The invention of the CubeSat, which is a result of decades of Moore's law exponentially decreasing the size and increasing the power of commercial off-the-shelf electronics, lowered the barrier of entry to space so that one can throw commercial off-the-shelf sensors, cheap sensors, on a CubeSat in low Earth orbit, while before it was a massive school bus-sized satellite in geostationary orbit that would take years, if not decades, and millions, if not tens of millions, hundreds of millions to design, build, test, and launch. And the invention of the CubeSat really allowed entrepreneurs' imaginations to put different sensors on this CubeSat, this new form factor. And historically, the 2 sensors most frequently put on this CubeSat are Earth observation, taking photos of the Earth, and communications, communicating with the Earth. And I want to invest in different, unique sensors than those.
Okay, well, we'll be watching to see where you put your money. Tess, thank you so much for joining us on this exciting day. We'll continue to follow that second stage as it continues moving forward. Tess Hatch there of Bessemer, thank you so much. Coming up, we're going to be hearing from Alibaba. President of Alibaba, Mike Evans, just sat down with David Rubenstein of the Carlyle Group on Leadership Live. We'll have that conversation, how the Chinese e-commerce giant is navigating the COVID crisis and U.S.-China tensions, next. This is Bloomberg. China's Alibaba Group is looking to bulk up its U.S. businesses as part of an effort to help American small businesses weather the COVID-19 crisis. Carlyle Group co-founder David Rubenstein spoke with Alibaba president Mike Evans just moments ago. Take a listen to how the company is navigating the crisis.
Well, Alibaba, in some respects, is a huge e-commerce company like Amazon, but in almost every other respect, completely different. Its core operations are in China. There's a very large cloud business, very large e-commerce business, very significant logistics business and digital media and entertainment business. And it's become the leader in China, you know, with almost more than $1 trillion US of GMV sales, and over 700 million consumers on our platform. What it does internationally, though, and in particular what it does in the US, is still a mystery to most people because we don't have a platform in the US. So we're not here selling products in the same way that an Amazon or an eBay or other e-commerce operators would. But what we do, which is very significant, is we sell tens of billions of US dollars of great American products from brands, from retailers, from SMEs, even from farmers, to the Chinese consumer directly. And we've been doing this for almost 15 years. It's a business that continues to grow. And particularly in the COVID environment, the China consumer has become so important to many US brands and small businesses because that's where they see growth and the ability to benefit in the post-COVID environment.
So a lot of American companies say there are plenty of Chinese consumers. I'd like to sell to them. And the easiest way without setting up shop, I guess, physically in China is to do it through Alibaba. Is that correct?
Yes, it is, David. We have multiple platforms, some for cross-border, some for, you know, the big brands like Starbucks and P&G and others that are physically resident in the country. But across those many platforms, we provide the access point for thousands and thousands of brands and tens of thousands of SMEs to sell their products to the Chinese consumer.
Now, today, the market value of Alibaba is roughly $700 billion, something like that.
Mm-hmm.
And your number of employees is over 100,000, is that right?
Yeah, about 120,000.
Okay. So today, there's also something that's happened post-COVID, as I understand it. Many people in the United States want to get products like PPE products for healthcare-related benefits, and the only source was China. So you sold a lot of products, I assume, through Alibaba to Americans to help them through the COVID crisis. Is that right?
Not quite. First of all, there are other sources of PPE, Korea, and certain other markets. But our principal focus in terms of thinking about how to help with PPE and other medical products was to help source and vet countries as opposed to sell all of those products through our platform. So the work that I did with Governor Cuomo, for example, for New York State, was really not to sell New York State products through our platform, but to help source from reliable providers and also vet the quality of the product before the procurement teams bought it.
So Governor Cuomo or his staff contacted you and said, we are having trouble getting PPE. Can you help us? Is that essentially what happened and you helped facilitate that?
No, a little bit the other way around, which is I called Governor Cuomo and said, I'm a Canadian, but live in New York City and care about my state and the city. It's becoming clear to me that New York is becoming the epicenter of coronavirus in the United States. What can we do? What can I do to help? And he said, wow. He said, this is great. Please, let's talk. Let's figure it out. And together with his team, We did a huge amount of vetting and sourcing of PPE for New York State and for the hospitals.
Mike Evans there, president of Alibaba, along with Carlyle's David Rubenstein. All right, now TikTok is reportedly suspending talks to build a global headquarters in the UK. This on the back of the UK's decision to ban the Chinese telecom Huawei from its next generation networks. Joining us to discuss, Bloomberg's Shelley Banjo, who's been covering this story. Shelley, what exactly does this mean? Now, TikTok has become, essentially, example number one of the fallout from these U.S.-China tensions.
That's exactly right. So TikTok has been trying to really portray itself as not a Chinese company because a lot of the flack that they've gotten is from their ownership, the parent company ByteDance, which is one of China's largest tech companies at this point. And what TikTok is trying to show is we're not a Chinese company, we're a global company. And so they're trying to say we're going to create a global headquarters outside of China that will serve as TikTok's headquarters. And so this is kind of rumored to be the first place that they started looking. London is one of their biggest operations. They also have large bases in Los Angeles, New York, Dublin, and Singapore.
Talk to us about TikTok's broader struggle here. I mean, they have been trying now for years to distance themselves from China when in reality, the parent company is a Chinese company, right?
Yeah, and that's the inherent struggle for TikTok is that they can take every step under the sun. They appointed a new CEO, Kevin Mayer, who was at Disney. It's kind of like the most American CEO that you can get. And they, constantly trying to show all the great things that they're doing for American and global customers. But at the end of the day, as long as their parent company is still ByteDance, and ByteDance was founded in China but registered now in the Cayman Islands, they're still going to be considered by many, including American politicians who are kind of just getting started with the anti-China fight before the presidential election as a Chinese company.
Meantime, Kevin Mayer certainly has his work cut out for him. Of course, the app has been rocketing in terms of popularity, but at the same time, you've got Wells Fargo banning it from company phones, President Trump urging his supporters now in campaign ads to support a ban on TikTok in the United States. I mean, how big a risk and a challenge is that going to be?
They certainly have their work cut out for them. I mean, on the one hand, the interesting thing that's come out of the ban is that all these TikTok users have come out for TikTok saying, I don't actually care if the Chinese government has my data. I love this app, and you can't take this voice away from me. And so I think that was really an interesting thing to come out of this whole discussion. But at the same time, U.S. politicians clearly have TikTok, a target on TikTok, and there's a number of investigations going on. And so it is a problem for them.
All right, Shelley Banjo, thank you so much for that update. Of course, we'll continue to follow the story and your reporting on it. Thank you. Meantime, tech, lots of tech earnings coming out this week, including Microsoft and Twitter. Tech, of course, long a poster child for growth, but steady earnings growth and the ability to make money in this stay-at-home crisis has made the biggest tech names synonymous with quality and utility. Our Scarlett Fu reports.
The biggest knock against big tech, their outsized gains leave little room for misses, and investors who've been piling in may be quick to flee, especially if vaccine optimism or an improving economy sparks a lasting rotation into other sectors. So here's what could remove some of the shine from the 5 biggest tech names. For Apple, the pandemic may delay the iPhone 12 and leave the company unwilling to give a sales forecast for this quarter. Amazon revenue likely grew more than 25%, but it's also spending a lot. How much will it spend to keep its delivery network running smoothly and on COVID-19 expenses? Microsoft is benefiting from a shift to the cloud, but is it giving up some revenue now by allowing deferred payments on some contracts? And if the economy stumbles further, advertising budgets could disappear, hurting Facebook and Alphabet. Alphabet tends to rely on small businesses, particularly in the hard-hit travel sector. When you've only gone up, it doesn't take a lot to knock you down a peg.
Bloomberg's Scarlett Fu there. On the earnings calendar this week, Microsoft, Intel, Tesla, and Twitter. We will be across all of that as the numbers roll out over the course of the week. And that does it for this edition of Bloomberg Technology. I'm Emily Chang. Bloomberg Daybreak Australia is next. This is Bloomberg.